Hello and welcome to this weekly installment of the GoNoGo show here on StockCharts TV. My name is Tyler Wood. I'm a CMT charter holder, and today, as always, well, it hasn't been always, but I am very pleased to welcome back Alex Cole. How are you doing, my friend?
I'm very well, thanks. How are you?
I'm doing great. You know, the fall has begun. Kids back in school.
Yep.
Generally, seems like it's busier than ever, and so have markets. Although
Yes.
they're following some seasonal patterns that shouldn't be surprising to investors who've been doing this for a while. Alex, let's dive into the charts. Let's start with our cross asset heat map. These are the absolute trends at the very highest level. Talk to us about what we're seeing this week in terms of the trend perspective.
Yeah, I mean, very interesting week this week in terms of the equity markets. Everything else has pretty much stayed the same. We can see that the Treasury bond prices remain in a strong no, so that means that interest rates will be in a go trend. We'll look at those in a minute or two. Commodities, that third panel, still in a strong go. We can see the strength, as we'll look at later, in oil and other things like natural gas, but energy markets generally. And then the dollar in the lower panel, also very, very strong, as it has been now for a couple of weeks. So it's that top panel really that is the most interesting, I suppose, with equity markets trying to rally out of what was a no-go correction. We saw a lot of uncertainty about 2 weeks ago with amber go fish bars going back to no-go for a couple. And then, of course, this week we've seen a go bar, but it's quickly gone back to uncertainty. So I guess that's sort of the interesting bit. If we stay where we are, that looks to me like a higher low right after the correction, the lowest low a couple of weeks ago. So some positive signs perhaps, but so much of it will hinge on other macro factors like what happens with interest rates and of course the dollar. So lots to talk about, but interesting equity markets, I think, this week.
Absolutely. September tends to be a hard month seasonally. And certainly we're going to get to not just the index level, but where we can find some opportunities that are diverging from the chart of just the index. Alex, let's turn to a chart of the TNX, the 10-year Treasury yield. This morning, Wednesday, September 13th. Yes, we're doing this show one day early to accommodate some travel schedules, but we've got some interesting viewpoints on inflation data, and it seems like everybody overnight turned into an expert on macroeconomics and predicting what the Fed is going to do at their next meeting and the meeting after that. And certainly for a lot of those in the bear camp, those who have been resistant to observing the rally in equities here in the United States, they've been pointing to this recession or this runaway inflation that we're going to continue to see the Fed hiking rates and potentially break some things along the way in the stock market. What we talked about last week on the GoNoGo show was the idea that technical analysis equips us with the tools to separate our emotions and to disregard what might be just narrative and speculation about what will happen in the future, but instead to react to what is happening right in front of us, the truth of price action itself. Alex, when I look at this chart, obviously we're in a go trend. We are at elevated levels of interest rates and sovereign bond yields, but I don't see it rip roaring away. We seem to be consolidating in this uptrend. Tell us a little bit about your perspective of this chart of the TNX.
Yeah, I mean, certainly not a macroeconomic expert here either, but perhaps getting fairly proficient with technical analysis. And what we like to look at is just the evidence from the markets played out in the charts. And we are in a go trend on Treasury rates, right? We know that. We can see that. We've had a series of higher highs and higher lows. So yes, we're in a bullish environment for Treasury rates. But what we are seeing is that really strong resistance overhead. We've talked about this several times. And what that leads to is a discussion of whether or not we're in a runaway rate environment. As you said, you're not seeing that. Or are we in an elevated rate environment that may be stable for some time? So that's the horizontal level that I've got on the chart here. We do see some quite strong resistance at this level. And of course, if you turn our eye to the momentum oscillator in the lower panel, we can see that we're stuck at the zero line and we've got a go-no-go max squeeze. So that tells us that there's little directional pull at the moment, maybe a tug of war between buyers and sellers at these levels. So this might be quite telling in which way we go. Do we break to new highs and do interest rates start rising again quickly? Or perhaps if the momentum oscillator breaks into negative territory, we'll see price fall away from this level again, as we have seen a few times. If you want, Tyler, I can throw this out to a weekly chart to give you a bigger idea of where that resistance is coming from. And you can see this is what we're talking about, mostly sideways movement for Treasury rates. So if that's the case, then perhaps the equity markets can handle it and continue to thrive. And as we'll see, we've had some strong price movement over the last few days. But a break above this level would definitely be a bit of a concern for the equity markets.
Absolutely. As Louise Imada and Ralph Acampura have taught us over the last several decades, the bigger the base, the higher in space, the broader the top, the bigger the drop, or some paraphrasing of that that quote. So it is important for all of us to recognize that above this resistance level, above 4.5%, there certainly is room to run to the upside. But so long as we are in what is a choppy range-bound market and maybe vacillating between the upper and lower bound of this channel that's been persistent for a year now, that would certainly spell out that stability that we've talked about. Certainly, rates are elevated relative to their 40-year history and this sharp downtrend that ended in the negative rates in 2020. But as long as we are within that channel, we certainly see that stability continuing. Alex, let's turn our eye to a chart of the US dollar. And here at GoNoGo Charts, we like to use ETF proxies. We can get a sense of volume. UUP is the ticker symbol we're looking at. A little different story for the US dollar. We broke above that resistance area, came back, it retested as an area of support. That's that polarity principle we talk about week after week, and the importance of some of those classical concepts from Edwards and McGee and early technicians. Where we're at right now, Alex, it looks like we've pulled away from an extreme overbought level on the GoNoGo oscillator. Volumes come off of heavy volume. We're in lighter volume territory, but still at a positive momentum reading of 3. What are you seeing on this chart in terms of what we could expect next for this go trend?
Yeah, well, this is this slightly different look from what we were seeing with rates. In this case, we have got above that sort of resistance level that we've seen on the chart for several months, and we've retested. We see the oscillator found support at 0 and rallied right away, and that led to a new high here for the dollar on the daily chart. And if we look at that on a weekly chart, we can see how significant that break is, right? We've had this long period of consolidation or sideways movement, and then of course the break to the upside. So still some room to run before these highs that we had back in October of last year. But certainly quite a bullish chart for the dollar.
Yeah. And when we see those counter trend correction arrows, you can see it on the weekly chart here. We were also seeing that on the daily basis. What we're looking at with counter trend correction is that when price has moved significantly in any direction, we can see momentum tend to come to a period of exhaustion. And that's an intermediate term or short term, perhaps high for price action. But what this is screaming to me is just a bit of consolidation of those recent gains in the US dollar, but certainly stacking up to look like trend continuation configuration on this chart. Excellent. Let's turn our eye to a chart of gold. GLD is the ticker symbol for the ETF. And very important decision point here for all of the gold bugs on this daily chart. In a no-go trend, we've made a series of lower highs and lower lows, but maybe putting in some support right here in this no-go trend and building a go-no-go squeeze on that momentum oscillator. Talk to us a little bit about what we might expect here in the days to come.
Yeah, I mean, I think a lot of it will depend on where the next low comes in. If the low comes in higher than this one, we'll be saying that we've seen a new higher low for the first time. As you said this correctly, there's been a series of lower highs and lower lows. Well, if we find some support here in price rallies, that could be the first higher low that we've seen. And that would line up with what we're seeing here with the oscillator in positive territory and now testing the 0 line from below. The go-no-go squeeze is building. That tells us there's reduced volatility. So we'll look for a breakout of that. If it goes back into negative territory, then we'll be saying that this no-go trend is likely to continue and perhaps threaten to make a new lower low. If it breaks back into positive territory, so really in positive territory and then successfully testing that 0 line, we may be seeing a higher low and a move towards an attempt at a go trend. So real decision-making point, as you said here.
Absolutely. As our good friend JC Peretz likes to point out, some of the only truths in the financial services industry is that securities have to stop going down before they can go up. So we're looking for that on this chart right here at this decision point for this chart of gold. Alex, let's switch it up a little bit. Let's go over to a commodities rel map. One of the things that a lot of investors are looking at are where the opportunities lie for asset allocation. We certainly want to pay attention to the fact that there are a lot of securities we can hold in our portfolios beyond just equities. And what we're looking at right here are a number of different baskets of commodities relative to the performance of the S&P 500. And so on that simple ratio basis, and we've stripped out all the price action to just look at the trend conditions. And on a heat map such as this, when we see those areas of blue and green, we're finding the outperformers. And as we go down this list, BNO is a ticker for oil, Brent crude. We've seen DBA, which is a diversified basket of agricultural commodities. DBC is a broader commodities index. FCG is natural gas. And then all the way down there at the bottom, US oil. So certainly a clear thematic trend in the energy space, nat gas and oil. And we're going to talk a lot about that, as we have been for the last several weeks, in terms of not only asset class allocation, but then even within the S&P 500, areas of outperformance and diversification that investors can look towards. So moving away from this heat map, let's take a look at the S&P 500 just on a pure price basis. Let's dive into that daily action once again, just to review a little bit of that heaviness that we've seen in this recent pullback, and what we could expect going forward. You did mention at the start of this episode the trend configuration model, and if you're new to GoNoGo charts, the whole idea is to use a responsible checklist, a lot of different technical indicators that would help us identify the robustness and the direction and the strength of a trend, all of that being computed in the background. And what we're seeing on the price panel is just a color-coded representation of all of that weight of the evidence that's calculated in the back end. So Monday, we were in a go trend, a bit of a doji formation on price action that day, some indecision, and we've been back in amber neutral territory from that trend model. Alex, talk to us again about the importance of the GoNoGo oscillator here at the zero line.
Yeah, I mean, we're really trying. We can see that we've put in what looks like a higher low. We're trying to get out of this no-go correction. And what you just mentioned there, the importance of the oscillator, we did break above the zero a few weeks ago. And that told us that the no-go wasn't healthy, right? Because as we know, if the trend is down, then momentum should stay negative, should stay below the zero line, finding resistance at that level. And when it broke through, then we saw uncertainty in the no-go trend. We saw those amber bars. It did return back to no-goes as the oscillator returned to test the zero line. And that's where we are now. So right now, we're seeing the market trying to make up its mind in terms of momentum, in terms of the direction of that momentum. If we see momentum go positive, find support here, then that'll definitely give a little bit of a push for price to move higher. A break back into negative territory, of course, would be tough, and we might see a return to no-go bars. But if the oscillator can find support here, that'll tell us that momentum is staying on the side of possible movements higher.
Absolutely. Now, what's important for all of us to recognize is that within an index like this, particularly a cap-weighted index, you can see some important things show up on this top level when individual names, very large cap companies, are struggling. So, Alex, let's pull up a chart of Apple real quick. I'm sure all of you have heard more commentary about Apple over the last 2 weeks than ever before. Announcements about new products, very expensive products, a whole rehash of their AirPods and new phones, and all of that, which is going to generate the future cash flows that are going to justify for all those fundamental investors why they want to own more Apple shares. What we're seeing from a price action perspective is that that recent nosedive into a no-go. We pulled up, we broke back above the zero line on the GoNoGo oscillator, struck into amber neutral territory on the trend model before quickly coming back to the zero line on heavy volume. Some sharp sell-off right back to this area that has been support for Apple. What catches my eye, Alex, is that we have broken below the zero line on heavy volume into negative momentum. Now, this is just a daily perspective on Apple, but talk to us a little bit about that trend continuation icon for no-go or short sellers that are playing to the downside.
Yeah, I mean, we know that when a trend is in place, in this case a no-go, and momentum goes in the same direction, in this case negative, then we see trend continuation icons. That tells us that there's a no-go trend in place. Momentum is resurgent in the no-go or negative direction. But what I'd also like to point out, Tyler, is just the beauty of that traditional technical analysis that we like to talk about. And because of the large price window here and only just the one oscillator panel, look at how we rallied right up to the top of that gap. That's just amazing to me how sort of specific that was. And then how we've fallen back really right back down to these levels that were support. So this offers a real clue as to where these levels might be found for somebody looking for support or looking for resistance at the top end. So definitely from our perspective, we're going to look to see if the oscillator holds the zero line. You can see that it's moving as we speak. It's in negative territory. It's flipping back to zero. So that'll, of course, lock in at the end of today's price action. It'll be interesting to see where that is.
Absolutely. And let's pop this out to the weekly basis just to get a little longer term perspective on what Apple has been doing.
Yeah. I mean, you can see again support where this support's coming in. Look where that's coming from. That's actually coming from way back in the chart, prior highs that were resistance. So that concept of polarity. And then also, if you zoom in, you can see that we are testing that zero line on the weekly chart as well. So if we find support at these levels, that'll be very, very interesting and probably set up the daily chart for more gains too.
Absolutely. So the point we're making here is that a $3 trillion company in a cap-weighted index, this has a very large influence on the directional movements for the S&P 500. But we're talking about a single company representing a large share of a cap-weighted index. Within the broader index, we can find lots of opportunities. And for that, let's dive into our sector rel map. As we do each week, we take a look at the individual ETFs representing the sectors of the S&P 500. We're looking at those on a ratio basis, looking at relative strength to find that those areas of outperformance where we could look for idea generation, where we could look for allocations. If you are a tactical asset allocation manager and you're thinking about just getting your sector bets right, it's very clear that we do have growth equities sectors leading: information technology, consumer discretionary, and communications. Certainly not the defensive areas of the market. You can see those lower three panels of consumer staples, the utilities, and real estate really underperforming this S&P 500. And so on a relative basis, when they're underperforming a market that is down at the index level, that means we are definitely not allocating to those underperforming sectors. But interestingly, it's growth plus energy. And the XLE, the energy sector of the S&P 500, has been a consistent outperformer throughout this entire rally here in 2023. And we're still seeing that in strong blue go bars relative to the S&P 500. Lots of opportunities in the energy space. Maybe a little bit of a double-edged sword, right? Rallies in oil and natural gas, adding to the inflation narrative, adding to perhaps expectations of further Fed hikes to combat inflation. But for those of us who are allocating appropriately, we're going to see those returns from sectors that are outperforming the S&P 500. Alex, let's take a look at a few other charts just to get a sense of maybe some of the positive or more constructive nature of this environment. Certainly, it's risk on, not defensive sectors that are leading. That posture or positioning for portfolio managers is very constructive. But let's pull up a chart of the XHB, the Homebuilders ETF. And for all of the macro economists out there, we respect the hustle, love that there are different sets of data that those folks are looking at. But for a real accurate and real-time picture of what's happening for the U.S. consumer, we're still seeing home builders in this higher area, right? We're in a no-go trend on the daily basis, but testing the zero line, building a go-no-go max squeeze. So certainly the potential for putting in a higher low and resolving what we could see on a weekly basis as just a trend continuation or consolidation area on this home builders ETF. Yeah, that's the weekly view. Alex, talk to us a little bit about what you would see here for a test of that zero line within this go trend.
I mean, obviously some very, very significant resistance that came in and turned prices lower a couple of months ago. But with support found at the zero, if that happens, that'll give price a push to to go and attack those levels again and perhaps make new highs.
Absolutely. And then let's take a look at the SOXX, the semiconductors ETF. We've had a lot of speculation about, Nvidia can't possibly go any higher. But as a lot of the thematic strategists that are out there, equity strategists have talked about, the AI revolution is only going to be as powerful and as ubiquitous as we can create semiconductors to handle all that data processing and data storage. So on a weekly basis first, let's take a look at the semiconductors. Still very similar picture to the home builders, reaching up to those prior resistance levels, but in strong go conditions from that trend following model.
Yeah, absolutely. And we'll see if this holds as it has done now 3 or 4 or 5 times. That'll provide a lot of support for price to try to go higher again here too.
Absolutely. Just for a sense of risk management, pull that back to a daily chart.
Yeah.
And let's just see about where we could expect support to come in here on this no-go trend.
Yeah, I mean, I think you've got these levels here from earlier in the chart that were support. You see a clustering around here at the lows from this recent no-go. If price sort of meanders around these levels and continues to find support at the zero line, I think that that's a healthy level for support. But we'll have to see how that plays out in terms of momentum for sure.
Absolutely, and that's why we keep an eye on divergence and confirmation from our momentum oscillator, the GoNoGo oscillator panel below.
Yep.
Alex, for the final chart of today, let's pull up just an absolute trend of DBA, that diversified basket of agricultural commodities, right? So again, folks, we're talking about diversification. Almost no correlation between the semiconductors and things like wheat, corn, and cattle. When I see this on the daily basis, obviously positive movements from a trend perspective and strong go bars with positive momentum. But on the weekly chart, it's even clearer that we might still be in early innings for this trend.
Yeah, absolutely. I mean, you can see just a couple of higher highs and higher lows, but you can see the continued trend continuation icons as the oscillator finds support at zero. And it just did again a couple of weeks ago. So quite a clear level here. You can see this is how we like to read these two components, the trend and momentum. And when the trend changes, we look to see if that zero line flips in terms of support and resistance. While we're in a no-go correction, we see resistance at the zero line. Once that's broken, it becomes support for this beginnings of this new go trend.
Absolutely. So from those of us at GoNoGo Charts, we wish you all the very best. I'm hoping to see many of you in Las Vegas at the Wynn Hotel next weekend. GoNoGo presentation happening early Saturday morning, 9 a.m. on a Saturday. Not sure how I got into that slot, Alex. Hopefully nobody will be at the slots late Friday night and can make it to the session. And we'll make sure that the links are below for those of you who want to check that out. There's also a live stream option. You can register for the virtual event as well. And until next time, I want you to trade them well, take care of each other, and we'll see you next week.